Good afternoon and thank you for joining us. The stock market continued its record run in October. Since the April meltdown, the S&P 500 has soared almost 40%, its longest monthly advance since 2012. The tech-heavy NASDAQ 100 index is on a 7-month run, its longest winning streak in 8 years. So far this year, the S&P 500 is up around 16%. Historically, January through October gains of more than 10% predict positive performance for the rest of the year. The result has been an avalanche of money pouring into the stock market, $17 trillion from the April lows, in fact. The NASDAQ 100 results are mostly AI related, and the leader of the AI pack is NVIDIA. Last month, it became the first company to achieve a market capitalization of $5 trillion. To put that into perspective, NVIDIA's market value is greater than the gross domestic product of all but 3 countries, the United States, China, and Germany. But success has not been a straight line. NVIDIA was founded in 1993. 3 years later, it almost went out of business and was forced to lay off nearly half of its staff when an experimental chip failed. But it is important to note the stock market is not a one-trick AI pony. There are several sectors and companies outperforming the S&P 500 this past year. For example, the banks Goldman Sachs and JP Morgan, Uber and Caterpillar, and the buy now, pay later company Affirm and Dutch Brothers Coffee. We think the 2 most important factors for our positive market outlook are November typically kicks off the best 6 months of the year for the stock market, and corporate earnings are justifying investor enthusiasm. More than 60% of the companies in the S&P 500 have reported earnings, and most of those firms have topped expectations. As always, there are risks from geopolitical to trade, but overall the macroeconomic environment remains positive for stocks. The Fed's interest rate cut last week was expected, although Chair Powell was cautious about future cuts this year, and the Trump-Xi meeting lowered the volume of the U.S.-China trade war. Thank you for joining us. We hope to see you next month.